Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jeff Kilburg, CEO of KKM Financial, to wrap up the week with us on what's been an incredibly exciting week for the markets. And of course, that's all predicated on the U.S. election. And Jeff, what a weekend. I'm looking forward to the weekend, obviously, but what a week it was with the U.S. national election and the rebound that we saw in the market, even though we're kind of petering out a bit today.
Yeah, sensational week, to say the least. And of course, there's a lot of things in flux. The uncertainty persists. But nonetheless, let's rewind just a week ago. We saw the S&P 500 testing the lower end of the range, Jill, around 3,200. Here we are, nearly 8% higher, back about 1% or 2% away from the all-time highs. And with this morning's jobs report, it's interesting the data strengthening. Yes, our short-term focus is see on who the actual election is, but the market seems to sense that there's not going to be a change in the Senate. So this purple wave, we hear about this purple wave, which is obviously a blue president in Biden, but also Republican Congress. So it'll be interesting to see if that blue wave stays, but we have a long way to go still. There's going to be weeks and weeks of uncertainty specific to the presidential election results.
Right. And also, too, we're going through record cases with COVID-19, and hospitalizations are ticking up. So that's going to be a concern, particularly for the northeastern states. And of course, you being in Chicago, where the weather is colder and we're not going to have the outside flexibility that we had over the summer. We'll be focusing on that. But besides that, Jeff, we went through earnings season and it was actually quite good. I mean, earnings was a blip on the radar, and usually that's all we focus on.
That's right. And it's interesting to see semiconductors. We're looking them light up the map today. So you look at some of the names in that SOXX, that's the semiconductor ETF we like to utilize. So that's been a space that's getting some attention. But we also saw a little bit of love in some of the value, some of the laggards. Look at a name like CVS. A name like CVS is about 10%, big pop today. And that kind of plays into the conversation of laggards getting love. It talks about the value into growth. And I think we're still talking about the conversation, but right now there's just so much to digest. But the bigger picture, it is a risk on sentiment. We're seeing the VIX move lower today. We're seeing assets continue to come into the market. I know the market's not higher today, but to sustain the rally we've had this week, that's very impressive in the midst of this uncertainty.
This is like the second or third time this year we've essentially round-tripped a correction within a week of itself.
The velocity, that is what's jaw-dropping. It's absolutely, but that's what's really providing a lot of opportunity, Jill. So we go back to the month of March when we got a little bit too accustomed to the volatility. Of course, the VIX was above 70, even above 80 for a time there. But here we are with the VIX still tethered to 30. So we're not out of the woods. I think you're going to continue to see volatility. But with volatility comes opportunity, specifically in some of the sectors we're focused on, where we're going to see some repositioning. No doubt about it. A lot of people were prepared for rebalancing. They were concerned about the tax code. It doesn't seem like there's going to be a change in tax code. Therefore, some of those preparations that financial advisors were making, that may go to the wayside. But a lot of the underinvested, those folks sit on the sideline, they have to go somewhere, Jill.
You know what, Jeff, is so interesting, the energy complex, it still has not really participated in these moves that we've seen. And in my mind, until we kind of get back to somewhat of a normal, especially in the United States, when we see that travel demand uptick, I still, it's still be challenging for energy.
Yeah, energy has a lot of headwinds. If we look at the S&P 500, we break it down into sectors. Energy is the worst sector. Right next to it is financials, but energy does have some headwinds. But as we see the global economy, which is being driven by the global central bankers, stimulus, additional stimulus coming out of Washington, hopefully, but that should help demand. It should stabilize and keep crude oil tethered to $40. But a lot of the oil patch has really been decimated. But that inside of that decimation, we will see consolidation. So I think 2021, I'm not saying it's going to be a great year for oil, but I think you do see a little bit of a rebound just because it's been absolutely brutally sold all in 2019 as well as 2020.
Yeah, I can't wait until we can get back on the airlines and just travel, even if it's for work. I know there's a lot of pent up demand.
It's been a while.
Right? Who would have thought? All the times that we've complained about having to deal with the airports and delays and getting stuck, in Chicago with weather on the overnight, and New York, because we always get your weather the day after. But people looking forward to that business travel. But I also think 2021, as you had said, is going to be an interesting year for M&A in general.
Well, and I think you bring up a great point. So you talk about we don't fly anymore. We don't really go to the restaurants, hospitality. So some of those sectors, is there value in some of the names like a Boeing, like a Delta, like American Airlines? We find some of those names to be essential. Those names are essential to the U.S. economy, American way of life. What are they going to turn around? Well, of course, that's going to be really contingent upon how many people are actually traveling. I know we got up to about 1 million people per day through TSA. Now that's dropped a little bit as there are concerns. We're going into the winter season here in the Midwest. So that is really important to gauge. But this is going to be an opportunity going into Q4 for some of the names that have been laggards, some of the names that should be bellwethers. And that's the financial advisor conversation we have. Do you understand the stocks that you have? Will those stocks have pricing power in a year or two? Will they be around in a year or two, Jill? But nonetheless, will they have pricing power to deliver to shareholders in a year or two? And that's where that value conversation is really coming back into vogue. I'm not saying people are walking away from growth, but the value, there is value on the S&P 500. And Bill Miller actually talked about there are some stocks still for sale, even at these levels.
All right, my friend, great work this week getting us through the markets. Thanks for joining us on Trade Talks.
Thank you, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.